Breaking update for July. Social Security, SSI, and SSDI recipients' year eligibility just changed. The income limit has officially been raised to $750, and checks are already being mailed out to thousands of newly qualified individuals across the country. If you were previously denied or received reduced payments, this change could finally open the door to full monthly benefits. For years, outdated income thresholds have kept millions from getting the support they desperately need. But this month, the rules are shifting and it could mean hundreds or even thousands of dollars back in your pocket. Here's what you need to know. The new income cap is now $750, up from previous limits. Thousands who were disqualified before may now be eligible. Checks are already in the mail for early approved recipients. Applications are open now, but you must act fast to receive benefits in this cycle. This update affects seniors, low-income Americans, disabled individuals, and anyone receiving or applying for SSI, SSDI, or Social Security retirement benefits. With inflation still putting pressure on household budgets and fixed incomes falling short, this is a rare opportunity to finally qualify under the new rules. In this video, we'll break down who qualifies under the new $750 income threshold, what documents you need to apply or reapply, how to claim your benefits quickly, when checks will be mailed, and how to track them. Don't assume you're still ineligible because the rules have changed. If your income is under the new $750 cap, you could start receiving full benefits as early as this month. But time is running out. Stay with us as we explain everything you need to know to claim your payment, maximize your benefits, and avoid missing out on money you may now be owed. Let's talk about what's happening right now in July. The Social Security Administration has made one of the most significant changes in recent years by raising the income limit to $750. This isn't just a small adjustment, it's a game-changing increase that's opening doors for thousands of Americans who were previously left out in the cold. If you or someone you know has been denied benefits before, this is your moment to take action. The timing of this couldn't be better. With inflation still affecting everyday expenses and many families struggling to make ends meet, these increased limits aren't just numbers on paper. They represent real help for real people. We're talking about substantial monthly payments that could help cover rent, utilities, groceries, and medical expenses. And here's the kicker. If you qualify, you might be eligible for retroactive payments too. Now, let's break down exactly who this affects. First, we have Social Security recipients, whether you're receiving retirement benefits or you're a dependent beneficiary. Then, there are SSI, Supplemental Security Income recipients, who typically have limited income and resources. And don't forget SSDI, Social Security Disability Insurance beneficiaries. If you're unable to work due to a medical condition, these changes could be particularly important for you. Here's something many people don't realize. The new income limit isn't just about your wages from work. It takes into account various forms of income, but there are also several exclusions and deductions that could help you qualify even if you think your income is too high. For example, certain medical expenses, disability-related work expenses, and even some forms of assistance don't count toward this limit. Let me share another success story that just happened last week. Michael, a veteran with a partial disability, had been working part-time at a local hardware store. He was making just enough to disqualify him from additional assistance under the old limits. When he heard about these changes, he immediately applied. Now, he's receiving an additional $800 monthly that helps him cover his medical expenses and still maintain his part-time job. This is exactly the kind of situation these new limits were designed to address. One of the most exciting aspects of these changes is how they affect working individuals with disabilities. The Social Security Administration has recognized that many people want to work and contribute to society while still needing some assistance. The new limit of $750 provides more flexibility for earned income, meaning you can work more hours or take a better paying job without immediately losing your benefits. But here's where it gets really interesting, and this is something not everyone knows about. There are special provisions for self-employed individuals and people with certain types of income. The Social Security Administration has implemented what they call income exclusions that could mean even more of your earnings don't count toward the limit. This includes things like impairment-related work expenses, certain educational expenses, and even some business costs if you're self-employed. Let's talk about the application process, because this is where many people get overwhelmed and give up. Don't let that be you. The process has been streamlined, and while there's still paperwork involved, it's more manageable than you might think. The key is gathering all your documentation before you start. You'll need proof of income, medical records if applicable, and identification documents. But here's a pro tip. You don't have to wait until you have everything perfect to begin the process. One thing that's crucial to understand is the timing of these changes. While the new limits are effective now, the Social Security Administration processes applications in the order they receive them. This means the sooner you apply, the sooner you could start receiving benefits. Don't make the mistake of waiting too long. Every month you delay is potentially money left on the table. I want to address something that might be holding some people back: the fear of losing other benefits. Many people worry that qualifying for these increased benefits might affect their eligibility for other assistance programs. While it's true that some programs have interrelated eligibility requirements, the new income limits have been designed to work in harmony with many other assistance programs. In fact, qualifying for Social Security benefits might actually help you qualify for additional assistance. Here's another important point that often gets overlooked. These benefits can be adjusted as your situation changes. If you start receiving payments and then your income changes, you don't automatically lose everything. There are reporting requirements, of course, but the system is designed to be flexible and adjust to your changing circumstances. Let's talk about some specific situations where these new limits could be particularly beneficial. If you're a senior who's still working part-time to supplement your retirement income, these new limits give you more flexibility to earn without losing benefits. If you're disabled but able to work some hours, you now have more opportunity to earn while maintaining your support system. And if you're receiving SSI, the higher limits mean you might be able to accept more help from family members without affecting your benefits. There's also good news for couples. The new limits take into account household situations, and in many cases, both spouses can qualify for benefits even if one or both are working. This is particularly important for families where one spouse may be caring for the other or where both individuals have limited income earning capacity. Now, let's discuss something that many people find confusing: the difference between countable and non-countable income. Not all money that comes into your household counts toward the $2,750 limit. For example, certain types of assistance, like food stamps or housing assistance, don't count. Neither do tax refunds, loans you have to repay, or the value of help someone gives you in the form of goods or services rather than cash. Here's an insider tip that could make a big difference. Keep detailed records of your medical expenses, especially if you're working. Many medical expenses can be deducted from your countable income, which could help you qualify even if your gross income is above the limit. This includes things like prescription medications, doctor visits, medical equipment, and even transportation to medical appointments. Another aspect that's worth mentioning is the appeals process. If you apply and get denied, don't give up. Many people succeed on appeal, especially with these new higher limits. The key is understanding why you were denied and addressing those specific issues in your appeal. Sometimes it's as simple as providing additional documentation or clarifying your income sources. Let's talk about retroactive payments, because this is where things get really interesting. In some cases, you might be eligible for benefits going back several months from when you apply. This could mean a significant lump sum payment in addition to your ongoing monthly benefits. However, you need to apply first. These payments won't come automatically. One thing I want to emphasize is the importance of regular reviews once you're receiving benefits. The Social Security Administration conducts periodic reviews to ensure continued eligibility. With these new limits, many people who were previously just over the threshold will now qualify. But it's important to stay compliant with all reporting requirements to maintain your benefits. There's also some flexibility in how you receive your payments. Direct deposit is the most common method, but there are other options available if that doesn't work for you. The key is choosing the method that's most reliable and convenient for your situation. Here's something that might surprise you. There are special provisions for people who are trying to return to work. The Social Security Administration has programs designed to help beneficiaries transition back to employment without immediately losing their benefits. These programs become even more valuable with the new higher income limits. Let's address a common concern: what happens if you accidentally exceed the income limit? The good news is that there are provisions for this situation. You're required to report changes in income, but occasional fluctuations won't immediately disqualify you. The system is designed to be fair and take into account real-world situations. I want to share one more success story because it illustrates an important point. Linda, a 45-year-old single mother with a chronic illness, had been hesitant to accept a promotion at work because she feared losing her benefits. With the new $750 limit, she was able to take the better position, earn more money, and still maintain a portion of her benefits. This is exactly the kind of flexibility the new limits are designed to provide. Now, let's talk about next steps, because this is where you need to pay close attention. If you think you might qualify under these new limits, don't wait to apply. The process can take some time, and benefits aren't typically backdated to before your application date. The sooner you start, the sooner you could receive benefits. Here's what you need to do right now. First, gather your income documentation for the past few months. This includes pay stubs, benefit statements, and any other income sources. Next, if you have medical conditions, collect your medical records, or at least a list of your healthcare providers. Finally, visit the Social Security Administration's website or call their office to start your application. Remember, these changes are happening now, and the checks are already being mailed out to qualified recipients. Don't let this opportunity pass you by. Whether you're receiving Social Security retirement benefits, SSI, or SSDI, these new income limits could mean more money in your pocket each month. I want to close with an important reminder. You don't have to navigate this process alone. There are resources available to help you understand these changes and apply for benefits. The Social Security Administration has representatives available to answer questions, and there are also advocacy organizations that can provide guidance and support. The bottom line is this: if you've been denied benefits before, or if you never applied because you thought your income was too high, now is the time to take another look. With the income limit raised to $750, thousands of Americans who previously didn't qualify are now eligible for full payments. Don't miss out on the benefits you deserve. Take action today. Thank you for staying with me through this detailed explanation. If you found this information helpful, please like and share this video to help others who might benefit from these changes. Don't forget to subscribe to our channel for more updates on benefits, financial assistance programs, and other important information that could help improve your financial situation. Until next time, take care and remember, these new opportunities are real, but you have to take the first step to claim them.